All right, let's talk Ethereum. It has absolutely rocketed into 2026, jumping over 8% right out of the gate. And, a move like that has everyone in the crypto world asking one giant question. So, is this it? Is this the beginning of that epic run to a new all-time high? Or is this whole thing just a trap, a bull trap, designed to lure in hopeful investors before a big fall? To figure this out, we're going to dive deep into an analysis from Benjamin Cowan, who has this really fascinating and maybe a little worrying theory about what's actually happening behind the scenes. So, the heart of his entire argument is that what we're seeing right now, well, we've seen it all before. In fact, he thinks the market is giving us a serious case of déjà vu, looking almost exactly like a very specific and, let's just say, not so great period from the past. And there you have it, right from the man himself. Cowan's whole idea hinges on this one comparison. He's saying that if you really want to understand where Ethereum is headed in 2026, you've got to look back at what went down in 2019. He thinks it's pretty much the perfect roadmap for what's coming. Okay, now look at this. The parallels are kind of spooky, right? In both 2019 and right now, the market took off right after a period of quantitative tightening ended. That's just fancy talk for when the central banks stop pulling money out of the system. In both scenarios, the price shot up and hit a major resistance level. Back in 2019, it hit that wall, got rejected, and then started this slow, painful decline. So the million-dollar question is, what happens this time around? So you might be thinking, okay, that's a neat coincidence, but is there any actual evidence to back this up? Well, let's get into the data, because Cowan points to two really specific clues that suggest this is way more than just a random echo. The first piece of the puzzle is a chart tool called the logarithmic regression band. Now, don't let the name scare you. Just think of it like this. It's a channel that shows the historical fair value zone for something like Ethereum. It basically cuts through all the noise, the insane bubble highs and the crushing lows, to give you a clearer picture of its real long-term trend. And here is the kicker. When Cowan looked at where Ethereum's price topped out compared to this fair value band, he found something pretty wild. The recent peak we just saw, it's at the exact same relative spot as the peak from that 2019 rally. And we all know what happened right after it hit that level in 2019. The price just started to bleed out. All right, clue number 2. This one has nothing to do with charts and everything to do with how people are feeling. A classic end of a bull run blow-off top is all about one thing: euphoria. Everyone's a genius, your cousin is quitting his job to trade NFTs, that kind of thing. But the top in 2019 and the one we're maybe seeing now, the mood is, well, it's apathy. Nobody really seems to care that much. And that's why the mood of the market is so important. A top that's built on apathy, it doesn't usually end with a spectacular crash. Nah, it's more like it just fizzles out. The rally just kind of fades away as interest dries up. And that is exactly what happened in 2019. And this current lack of crazy excitement suggests we could be in for the same kind of quiet fade. But just when you think the case is closed and it's a perfect repeat, there's a plot twist. There is one huge piece of data that does not fit the 2019 playbook at all. It's a total wildcard that could, honestly, change everything. And that wildcard is the ETH/BTC valuation. All this is really is a simple measurement of Ethereum's price versus Bitcoin's. You can think of it like a tug of war. If the chart's going up, ETH is winning. It's outperforming Bitcoin. If it's going down, Bitcoin is pulling harder. And here it is, the big difference. I mean, look at this. During that 2019 rally, the ETH/BTC chart was in a clear downtrend. Ethereum was getting weaker and weaker compared to Bitcoin. But today, you could easily argue it's in an uptrend. Ethereum is actually showing some muscle, some relative strength. This is the one piece of the puzzle that just doesn't fit. So what this really means is that this relative strength against Bitcoin is the one thing keeping the dream of a new all-time high alive. It's why Cowan himself says you can't just make a bold declaration and say it's impossible. If Ethereum keeps flexing on Bitcoin, it could find the fuel it needs to blast right through that resistance that stopped it cold back in 2019. Okay, so we've got a whole lot of evidence pointing to a 2019 repeat. But we've also got this one major wild card that could flip the script. So where does that leave us? Let's get to the final verdict. What does the analyst think is the most likely outcome here? So after weighing everything, the good and the bad, Cowan comes to a conclusion. He says that, yeah, that Bitcoin wildcard is a big deal, but the similarities to 2019 are just, they're too strong to ignore.
He still believes that the 2019 scenario is the most probable path for Ethereum to take this year.
And he doesn't just leave it at that. He lays out a pretty specific roadmap. So step 1, he expects this rally to hit a wall, to run out of gas at what he calls the bull market support band, which is somewhere between $3,400 and $3,700. Step 2, from that point, he sees a slow, grinding decline over several months back down into that fair value channel we talked about earlier. And step 3, the silver lining is that this whole process should open up much better buying opportunities for long-term holders later on in 2026. So what does all this mean for you? Well, first, the short-term outlook is, a bit shaky. You gotta be cautious. There's a big wall of resistance right ahead that could stop this rally cold. The main thing you need to watch is that ETH/BTC valuation. That's the canary in the coal mine. If it stays strong, great. If it weakens, watch out. And finally, if this whole analysis plays out, a little bit of patience now might be rewarded with much better prices later this year. And we're going to end on this final thought from the analyst because it really puts a timer on this whole thing. He basically says, this is it. This is Ethereum's window to prove itself. If it has the strength to break this 2019 pattern and push for new highs, it has to happen soon. If it can't make a big move in the next month or two, well, then the writing is probably on the wall for that slow fade down. The next few weeks are going to tell us everything.